I just as of recently started buying a little bit more aggressively and honestly sort of changed my mind about one of my favorite ultra high yielding dividend ETFs that even though I've owned some shares of over the past several months, I haven't really decided to take the plunge and buy it in a large fashion up until this point. Now in this video I'm going to share with you exactly which 16% more or less yielding, ultra high yielding that is, dividend paying ETF that I decided to buy a lot more of as of recently. I'm going to share with you my plan moving forward with this and why I changed my mind, etc. So if you're a more income focused investor, especially if you like some juicy high yielders that are relatively safe at that, make sure to stick around, drop a like down below, and let's get right into it. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So even though I'm sure some of you guys already guessed it, the ETF that I'm talking about, the ETF that I did actually decide to start buying a little more aggressively as of recently, is ticker symbol SVOL or SVOL, SVOL, whatever you want to call it, the Simplified Volatility Premium ETF. Now, even though SVOL is not really a new ETF across my channel, I've talked about this one before, and I've talked about the fact that when it comes to ultra high yielding instruments, or I would say different stocks or ETFs that yield, let's say, well north of 10-12%, SVOL is one of my favorites across the entire market for multiple different reasons. And because of those reasons, I've been stacking up shares of SVOL for a while now. Across my portfolios combined, I think as a last count, I have somewhere in between 300 or 400 shares. Now, I've also made it very clear that even though this is a portion of my portfolio, that I am going to be sort of careful when it comes to this one because I've been burned too many times before when it comes to these ultra high yielders because of things like NAV decay, etc. Now, before I go through and share with you exactly what changed my mind when it comes to SVOL and my plans moving forward with this one, let's go through for those investors that don't necessarily know and explain exactly how this ETF works. So this ETF more or less shorts the volatility index or the VIX. It says the Simplified Volatility Premium ETF or SVOL seeks to provide investment results before fees and expenses that correspond to approximately 1/5 to 3/10 the inverse of the performance of the CBOE Volatility Index, short-term futures index, while also seeking to mitigate extreme volatility. So basically this ETF uses a portion of its holdings to short the volatility index, but then also utilizes a small amount of money in case extreme volatility, like we saw as of recently when the VIX spiked up to I think 60. And if you go through SVOL's holdings as of right now, at least as I film this video, you can see that although there are some short positions when it comes to the VIX, there also are different things like treasuries. There's more or less sort of a mixed bag of different holdings in here, which is again one of the reasons on why I'm a little bit more bullish on this one moving forward. So even though SVOL's main objective, or one of the main objectives, is to short the volatility index, you can see that within the portfolio as of right now, at least within the holdings, there's lots of different bond funds, things that are more or less a lot more chill, a lot more safe. Now, as far as SVOL's distributions, this is where the 16% more or less yield comes from. SVOL has paid investors like myself now around 30 cents more or less every single month for a while now. And the great part about this also is that depending on what your situation is, these distributions are relatively tax efficient. Like for example, the last distribution I got paid back in July, this distribution was almost fully return of capital, which is going to be taxed much differently than ordinary income. So not only is this ETF relatively diversified as far as holdings go now, but also utilizes a pretty good strategy unless of course there's extreme volatility, which I don't think there's necessarily going to be extreme volatility all that often, but also the distributions are pretty massive and they're very tax efficient. So even though SVOL does have a lot to offer, this ETF still is far from perfect in my opinion. The expense ratio is pricey at 1.16%. I sort of get it though, this ETF is relatively management intensive, but the main reason, one of the main things that changed my mind when it comes to SVOL is exactly how this ETF has recovered over the past several days and how it performed just as of recently when the volatility index spiked to a crazy level. Now you can see that back on August 5th, SVOL dropped to a low of $20 more or less, which it was trading around $22, $23 for a while now. Now this is when the volatility index spiked to a massive level. I think it was up almost 100% in a day. But because of SVOL's stringent planning and because they mitigate the risk during an adverse move like we saw on that date, although we did see SVOL drop down at one point, it was pretty ugly, it didn't drop down nearly as much as if they of course didn't plan for that risk. Not to mention, ever since that drop, SVOL has been recovering quite a bit, and I think honestly it gave investors across the board, including myself, even more confidence in this ETF moving forward if we see a crazy spike in the volatility index. And I think we're really seeing that firsthand because the assets under management, the amount of investors that are pouring money into SVOL seems to just keep coming in and coming in. This ETF now is well over $1 billion in AUM, and like I talked about in a previous video, I think I started buying SVOL when I had like 200 million in AUM. So because of this ETF strategy and because of all the safeguards they pretty much have installed in it, along with the diversification into bonds and bond funds, I think this ETF is going to continue to pay investors like myself around 30 cents in distributions, which a lot of times are very tax efficient for months and months and hopefully years and years to come. But I think it's only fair to go through and see exactly what SVOL's total return has been since inception. And if we were to look at a $10,000 investment into SVOL with dividends reinvested along the way, we're talking around a 10.32% average annual total return, which is massive, especially because you're getting access to such a high yield, or around 37% total. Now, even if you were to spend the dividends along the way and not reinvest them, we're still talking at 8.18% on average and around a 29% total return, which again, you even have to give SVOL a little bit of benefit here because we just saw a massive jump in the VIX as of recently. Now that you guys sort of heard my thought process when it comes to SVOL and sort of my thoughts on this ETF moving forward, my specific plan, because of course I am a long-term dividend focused investor that wants to hold on to different assets that are going to move up in price and pay dividends and more dividends over time. But I said I'm also interested in some high yielding instruments if of course they're going to offer a total return that's going to not only be positive, but above say 5 or 10%. Now, like I mentioned towards the intro, I currently hold around 370 shares of SVOL as of right now across all my portfolios. And because SVOL is only around $22 per share, this is relatively a smaller position if you were to, of course, stack it up to some of these other positions in my portfolio. Now, because of that, I'm sort of pledging as of right now at least, and again, I can change my mind. Don't get upset if I change my mind. I'm going to keep you guys updated. But as of right now, just what I'm seeing with SVOL and with what I've seen during the most recent volatility attack, I think I'm going to continue to grab more and more shares a little bit more aggressively now, up until the point to where I probably have 1,000 or 2,000 shares across my portfolio. Now, this is just simply because the income potential for SVOL is massive, and even though I think for me personally this is going to remain an alternative investment across my portfolios, I do think, especially as of recently, SVOL does deserve a little bit larger portion in my portfolio, which is, like I said, I'm going to start grabbing shares in the 10s and the 20s up until where I have 1,000 to 2,000 shares. But I think it's also safe to say, like any relatively newer ETF that's only been trading for a few years, we have to continue to watch it and see it be stress test. But as of recently, the first stress test, I would say SVOL pretty much made it out of that with at least a B+. So now that I shared with you some of the changes when it comes to my perspective and my thoughts moving forward with the Simplified Volatility Premium ETF, I more importantly want to hear from you guys down below. Is this an ETF that you currently hold in your portfolio? Let me know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.